So we were led to believe early on, first impression was, hey, the market's going down because of what the moving averages were telling us. So in a situation like this, you don't want to trade until you're convinced that you know what's going on. Okay, so we did. We waited for divergence. We waited for MACD to flash a buy signal. We waited for price to break above the Tom DeMark trend line. So we had our at least 3 green lights that said it's time to buy. And you can see how powerful these price projections are, because this price projection said that price was going to go that high, and it did. So I would encourage you to go through your charts and look for these patterns and see if you can understand, see if you can predict where you think price is going. And over time, you'll get to really realize how powerful this stuff is. Now I'm going to talk about common sense trend lines. There's nothing wrong with common sense. Up until now, I've been talking about Tom DeMark trend lines. This is going to be a common sense trend line. You simply draw a line over the upper reaches of price action in this case. Measure the distance from the lowest point below the trend line. The way you draw a trend line, a Tom DeMark trend line, is you always work with the most recent swing high or cycle high, or the most recent swing low or cycle low, and connect it back to the last point. But it's dynamic, because as price moves along, your trend line is going to change. But that doesn't mean to say that previous trend lines are not valid, because all trend lines are depictive of support and resistance. So an old trend line still offers up clues on price activity. So all I'm trying to show you here is the fact that as price progresses, the trend line moves. Or you can draw the most recent trend line. You don't have to look far. You can take any chart and you can see these trend lines. They're very common. Once you get really good at drawing them and knowing how to use them and do price projections, you're going to see them all the time. This is why you have to get on your charts and do exactly. I love doing this because it really keeps your mind active, and you get to the point where you spot this stuff right up. And that's where you get to be a really good trader, because you know what's going to happen. And that's what traders really need, is they want to know where is price, where is it going, and how far is it going. And by studying your charts, you'll get this over and over again. Well, let's just see what we've got here. We've got the trend is down according to the 200 exponential moving average. We have divergence on MACD to price. Price is cycling higher. We've got MACD waving lower. You can see how after you get some experience with this, you're going to be really careful to not jump the gun. You're going to really go through these steps, and you're going to say, aha, I know where price is going. It's not going up, it's going down, and MACD just flashed its sell signal. What's wrong with waiting? And you won't make as much, but when you finally pull the trigger, I know why I'm getting in, and I know I'm going to make money. That's really what it's all about. And I call it the 3 green lights. In other words, you should write this stuff down on a piece of paper. In other words, I'm looking at a chart, and this is what I see. This is green light number 1, green light number 2, green light number 3, pull the trigger. Then document the results of the trade in your log, and you should go through this log on a regular basis. Like, what trade did I take? Why did I take it? What was the outcome? Why don't we take a stretch break, because this has been pretty heavy-duty stuff.